Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for the segment, we have David Traynor, CEO of New Constructs, an investment research firm, to discuss why investors need to take matters into their own hands in a volatile market. David, it's great to have you with us. Welcome to Trade Talks.
Thank you. It's great to be here.
Why can't investors just rely on robo-advisors to handle their investments?
I think we've learned that the robo-advisor model is a little bit too hands-off. I think just helping people make asset allocation decisions between stocks and bonds is not enough to compete with traditional brokerages. And I think technology's got to take the robo-advisor or more automated advisor model another step further. And that's to give more specific advice on understanding individual ETFs, individual stocks based on investor preferences.
And David, no matter what the latest investing trend is, one thing will always matter. You seem to always come back to this. Tell us about that.
We think fundamentals matter. And it's been a lonely call for most of the last 15 to 20 years. In the last year and a half or so, it's been a very good call. But look, we think the idea of investing as a way to get wealthy slowly and not as a way to speculate or try to get rich quick is something that's been lost on markets for quite a while. Look, Wall Street and E-Trade and TD Ameritrade and CNBC, they all benefit greatly from a get rich quick mentality that gets people running in and out of stocks and trading. I mean, look at Robinhood. I mean, this thing was entirely designed to take advantage of individual investors and sell off their order flow. This is how bad it's gotten. And investors are going to continually be vulnerable to these kinds of fads and trends if they don't make fundamentals at least some small part of their investing process, Jill. I mean, look, I'm not saying it has to be 100% of the process, but fundamentals should be at least some part of the process so that investors have some touchstone, some rock, some foundation upon which to understand the risk they're taking.
Yeah, David, it's interesting that you say that because we live in a society now where everything's predicated on demand. You point, you click, it's there. It could be there within the hour. But investing, to your point, is not just as simple as point and click. Why do investors need to know what they own and not simply follow a trend or what they see on discussion boards or see on social media?
Yeah, I love that point, Jill. Yes, we are such like an instant gratification society. And as long as someone tells us we can get rich quick, we're willing to chase it. You only live once, FOMO, YOLO, MOMO. I mean, all these things are just another example of how people are hoping to substitute, I don't know, speed for skill. And it just doesn't work over time. And so the importance of understanding what you own is about making sure that you're not owning something that's really just a false premise. I mean, we're seeing so many of these stocks get blown up. DoorDash, Peloton, Carvana, Netflix. And for so long, there are many people out there saying, hey, these business models don't work. There are plenty of people out there willing to sell you on, oh, yes, the business model does work. Because guess what? Everyone on Wall Street is going to make money selling the stock, doing the IPO, selling more debt, selling more equity, right? But those people are conflicted. And investors need to understand the conflicted voices out there telling them what makes Wall Street profitable, but not necessarily individuals profitable. And fundamental analysis is the antidote to that. It helps you understand, hey, is this a good business? Does it really make money? And what does the valuation say about the company relative to its profits? Does the valuation imply profits are going to be drastically higher than where they are now? Or does the valuation imply profits will be lower? And it's all about understanding, Jill, risk reward. Like you want to buy stocks with low expectations, sell stocks with high expectations. And again, that should be a piece of the puzzle. It doesn't have to be all of it, but it should be a piece.
And I also think it's an opportune time that we're discussing this in April, which of course is Financial Literacy Month, because when we think about health, we think about long-term wellness. When we go to the doctor, we think about longer-term goals, right? So, and to your point, stock research, it's time-consuming, and it's also at the core of financial literacy. How do you view financial literacy, and why is it more than just beyond savings and debt and making that quick move in a stock?
I appreciate that question, Jill, because it's really a big part of what it is we do. If you see the About Us video on our site, improving the integrity of the capital markets is the mission at New Constructs. We help investors better interpret market information. It's pure and simple as that. And when it comes to fundamentals, right, we're digesting and analyzing with cutting edge technology these 200 to 2,000 page filings to produce a much truer and more accurate measure of profits. That's proven by Harvard Business School, the Journal of Financial Economics, and even some of the biggest quant firms in the world being consumers of this data, right? And we think that that's important because investors need to be able to trust the markets for the markets to operate efficiently. And if the markets become efficient, we have gross misallocations of capital, and we'll see a lot of pain out there, as we're already seeing. And let me tell you, anyone who's seen The Big Short has seen documentation of how much Wall Street does not get harmed when stocks or asset classes get terribly overvalued. They step out of the way and they leave investors or individual investors holding the bag. And we're trying to give the average investor an insight into how to avoid holding the bag, to put them on fair footing with the insiders by giving the individual investor access to that same fundamental insight that the insiders have access to, that lead them to sell before the masses sell.
All right, David, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.